and welcome. I'm Suyash Maheshwari and you are watching Last Tick here on News 9, where we break down the day's action on the D Street. Now, Indian markets kicked off the last week of 2023 in the green, extending their winning run to 3 sessions now. At close, Nifty was up 0.43% at 21,441 mark. We just closed about 9 points shy of the 21,450 mark, whereas Sensex added about 230 points to end above 71,300 levels. Now, the broader markets also participated in today's run. Both mid-cap and small-cap indices ended today's session in the green. Nifty Mid-Cap 100 was up about 0.65% at 45,388 mark, whereas a small-cap index ended about 0.14% higher at 14,866 levels. Now, with today's rally, all three indices, that is your Nifty, Nifty Mid-Cap 100 and the Nifty Small-Cap 100, have pretty much retraced about 78.6% of the entire fall from the high point of last Wednesday to the low formed on Thursday. Now, according to experts that we have been speaking to, 21,500 and 21,600 on Nifty will be a crucial supply zone. Now, the markets will have to close significantly above these levels and, perhaps with higher volumes, which can, open doors for new record highs and potentially open the door for 22,000 in the near term. Now, there will be one thing that bulls will be concerned about, and that is the sharp spike in volatility. India VIX, the fear index, climbed over 1% to end at 14.68 sort of levels. Now, these are the highest levels that we have seen since March 29 of this year. So basically a 9-month high. Now, some of this volatility comes from the absence of institutional money, which, remember, most of the institutions, big institutions, are on a Christmas and a holiday leave, so they will be absent from the market, and perhaps the volume will be thin, and some of this choppiness will also take over. If we move to sectors, all indices barring your IT, media and PSU banks ended today's session in the green. Now, IT sector specifically came under pressure, led by losses in Infosys, which, by the way, was a top loser among the IT stocks after an unnamed global partner terminated a $1.5 billion deal with the IT giant. On the other side, metal, pharma and auto indices led today's rally, and all three indices ended about 1% higher or so. But with that, let's also bring on board Mr. Amit Kumar Gupta, founder at FinTrek Capital. Hello, sir. Thank you for joining us here on News 9. Now, we are in the final week of 2023, and so far it has been a good year for equities. Nifty has surged about 18% or so year to date. Mid cap and the small cap indices are up somewhere around 45 to 50%. Anything, both on positive and the negative side that surprised you about 2023 and the run that we saw in Indian markets?
Yeah, hi, Suyash. Thank you for having me. So 2023 has been a pretty good year as far as benchmark indices are concerned. Or even the broader markets, the mid cap and the small caps. Mid cap indices are about 45%. Small cap index is about 55%, 53% also. So I think overall it has been a good year, a little more than what most of the people expected based on the earnings potential. But that's how the liquidity works, and that's how the markets work. It tends to surprise on both the sides. On the downside and on the upside. I think the good thing about this year is that in spite of all the headwinds which we saw from the global markets, whether it's in terms of rate hikes or higher rates or geopolitical issues in October in the Middle East. All of these things have been taken into account with the markets, and still we have moved ahead, on the overall market structure. So my sense is, heading into 2024, one should be a little careful in the broader markets, mid and small caps, avoid the heated, overheated and overvalued kind of zones or sectors. And there could still be, a lot of volatility heading into 2024. Remember, we have a lot of elections, not just in India and US, but almost 40 countries are going into election next year. So
Right.
that's a huge number, and we are going to see a lot of volatility on both the sides. But if one is smart about how to handle the volatility, then next year should also be a good year to invest into the markets.
Now, Mr. Gupta, apart from the heightened volatility that is expected due to elections, not only in India, but as you rightly pointed out, in 40 nations, what are some of the other major risk factors for investors to keep a track for 2024?
So I think in the last couple of years, what we have seen is not just in the last couple of years, even a little before COVID struck us, that geopolitical issues are becoming very critical, and it also changes the way you would invest into a particular geography or a particular country. Even before COVID, we saw issues between China and the US, pulping, and there were a lot of trade dynamics which changed because of that. Then COVID, we got the supply chain issues, which again impacted the global markets. It sort of started the India Atmanirbhar Bharat story, and all the PLI schemes, etc. And even now, what we are seeing is that this China plus one and the Europe plus one actually originating from the geopolitical scenario. So going forward, I would be keenly awaiting or keenly watching all these geopolitical issues, especially coming into an election year where a lot of decisions can be very short term decisions, but that can influence markets very quickly or very immediately. So I think one has to look forward, not just in US, but even in how things are unfolding in the Middle East. One needs to be cognizant of all the facts.
All right. And sir, like COVID cases are picking up once again. Is that a threat that we need to, keep an eye out for?
Suresh, I missed the first part. What threat?
COVID is picking up once again. We have seen a spike in COVID cases. Is that a threat that we need to be cautious about?
At this point of time, not so much. I think after so many lockdowns, administration and the state governments and central governments have sort of got a little experience in how to handling this. It's a risk, definitely. We have seen some sort of precautions being taken in some of the Southeast Asian countries like Singapore and Sri Lanka. And I think this morning also I was reading that in Himachal, in certain districts where the numbers are rising, we are seeing some sort of precautions being taken. But till
Right.
the point we don't get lockdowns and the economy gets to a standstill, I think these are only precautionary measures, and hopefully that will not turn into something which would lead to lockdowns and a killing of the economic measures.
And so, what about this crisis that's brewing in the Red Sea? If that persists, do you expect it to cause, perhaps inflationary pressure for a country like us?
Yeah, I think those things are already into consideration. In fact, what we have seen is in the last sort of 10 days or so, what is happening in the real Red Sea, some of the supply chains have started getting impacted. And we are seeing a little bit of inflationary pressures happening in the logistics space. So my sense is that that's a very short. I mean, in the short term, that could be a trigger. If it escalates even further, that is something which one needs to be very careful and carefully watch, and especially if it impacts the crude prices.
All right. And so IT stocks, especially Infosys, was in news today. The stock declined by about over 1%. In fact, after an unnamed global partner terminated a 1.5 billion deal with the company. Now, I have two questions here. Let's take one at a time. First, given that, one would have expected the stock to see a major correction considering it's a big loss of revenue for the company, especially at a time when discretionary spending in US and Europe, which are both big markets for Indian IT firms, that has taken a backseat. But that did not really happen today. Why do you think that was the case?
The $1.5 billion dollar deal, first of all, it was a MOU and not really an agreement which was signed. The MOU was signed in September only this year. And whenever these kind of MOUs are signed, these are contingent on a lot of terms and conditions from both the parties. And moreover, this $1.5 billion dollar deal was over 10 years. So the actual impact on the EPS on a per annum basis
Right.
or on a per financial year basis was very less actually.
All right.
Secondly, these deals can sort of get off for various reasons, requirements getting changed. Maybe the client wanted to deliver it into certain segments or certain pieces which the company did not agree to it. So there could be many reasons for taking off the deal. So I'm not too much perturbed by the deal being sort of waved off or not going ahead. I will be more concerned about what is happening with the management of Infosys.
All right. And sir, do you think that this is a company specific issue, or could it turn into a industry wide issue? Because at the end of the day, we are not getting much clarity as to discretionary spending picking up once again in US and Europe.
No, I think it's not even a company specific issue. It's more of a deal specific issue. The deal contours were not getting affected. The deal contours were not suitable to both the parties, and that's why the deal was mutually sort of terminated from. And that happens a lot with the MOUs which you sign. Not every MOU will convert it into an actual deal, practical level, implementable deal. So I think it was a deal issue. As far as the discretionary consumption is concerned, I think things are still slow as far as the services companies are concerned in the IT space. With things getting a little slow as far as US economy is concerned. My sense is, when we come to quarter one of next financial year, the April to June quarter, only then we'll get to know the idea whether that discretionary spending is picking up or not. But right now it's sort of status quo. There is not much big pickups or big deals which are happening, especially for the top 4 or 5 services companies.
All right. And sir, I mean, the primary market has been buzzing lately, and one of the companies that is expected to launch its IPO sometime in 2024 is Ola Electric. Now, the pure play EV company has filed its DRHP with SEBI. I mean, we don't really know the contours of that, the valuation and all. So, I mean, since we don't have a price band, but at first scan, is that an IPO that will be in your radar?
Not so much. I mean, it's still making operating losses. The company in the attrition is very high. I was just seeing the DRHP before joining you, and they have sort of 48% attrition in the last fiscal year. In 7 months of this year, they have a 42% attrition. Then on the other hand, this EV subsidy has gone down, so they have to take price hikes. That has clearly impacted their operating margins, and the losses have sort of mounted again. And my sense is that even though it's a well marketed brand in the two-wheeler electric vehicle space, there are a lot of concerns as far as the safety is concerned. There have been too many incidents, especially if you scroll through the social media, about burning of a lot of these scooters. So it will be interesting to see, how they sort of counter all these things. But going purely by what is given in the DRHP without the price band, the company's losses are still at 1,200 crores in the last fiscal year.
Right.
And these losses have actually increased. It was around 700 crore in the previous fiscal in the FY22. So the employee benefits have increased, the subsidies have gone down. So my sense is I think it will take some time before these operating losses get into change into profit and they come back to path to profitability. So I
Right.
would sort of avoid the IPO at least at the launch.
All right, that's Mr. Amit Gupta for you, sir. Always a pleasure speaking to you. Wishing you and your family and everyone at FinTrek Capital a very, very happy new year. Thank you for joining us here on Newsline.
Thank you, Suresh.
But with that, we have completely run out of time on this edition of Last Sick. Keep watching News 9.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है मनी 9। आजादी पैसे की, अभी डाउनलोड करें।
Hello and welcome. You're watching Business Plus. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy as we wrap up 2023 here on Newsline, bringing you all the movers and shakers, people, corporate startups that were in the news for right or wrong reasons. When we talk about corporates, there is no bigger name than Adani Group. With me in the studio are Karthik Malhotra, Krishna Kumar, gentlemen. Adani Group's story was where we began, where it all began, 24th of January. From that day onward up until now, Adani continues to be in news.
Oh yes, Shweta. And at this stage, it's difficult to say whether Adani has been in the news for the right or the wrong reasons, because it's one story which has done the full circuit. Starting the year on this very, very negative note, 24th of Jan, Hindenburg Research comes out with a report titled How the World's Third Richest Man Pulls Off the Largest Con in Corporate
Largest
History.
con in the
Right.
corporate history,
So, and that really sends the entire Adani Group stocks into
tumbling.
a tizzy. And, and initial reports that came out during the year suggested that as much as $150 billion worth of market capitalization of all listed Adani Group stocks were wiped away. But as we come to the end of the year, Adani has actually been able to pare most of those losses already, given whatever has happened in the whole year. Now, what were the charges that Hindenburg Research had framed against Adani Group? Right. I think there were two basic problems that Hindenburg Research had identified. One of them was misappropriation of funds, if I'm not mistaken. But I think the more critical one really was this minimum public shareholding, MPS, being violated. So there was this MPS violation by way of which Adani Group and promoters and people linked to the promoters of the Adani Group held more equity in the group than they should have legally. And the second issue coming from the MPS was this whole question of people taking stock price manipulation, people taking short positions or entities taking short positions on Adani stocks and profiting by virtue of doing that. So the year started with Hindenburg Research. SEBI obviously came in. Thereafter, we had the Supreme Court appoint an expert committee to look into the matter and to look into SEBI's own investigations into the matter. The expert committee appointed by Supreme Court did not find any problems with SEBI's investigations. SEBI, on the other hand, hit roadblocks. Out of the 24 issues that SEBI had to investigate, it did complete its investigation in 22 issues, but there were two more issues, and those two issues were about opaque structures that SEBI was hit against, because these were offshore entities not operating in India, and it was difficult for SEBI to penetrate through those opaque structures to understand who is at the top of that value chain, of that food chain, and who has actually ended up making money. And then the next obvious question would be, even if you somehow arrived at who made money, how are they linked to the Adani promoters. So this whole question of short selling, has not yet really been able to come to surface, come to light as far as SEBI's own investigations go. Now, multiple dates, multiple changes, delays, all of them sort of culminating towards the end of the year, where SEBI said it does not need any more time, and it told the Supreme Court that it is ready to go ahead and file its final report and understanding of what really went through. Through the midst of this entire, you also had OCCRP doing its own investigation, Financial Times opening another DRI investigation of 2014, etc.
Well, that merits an entire discussion. Let me quickly get in Krishna as well. Krishna, it wasn't just Hindenburg, because some of the Hindenburg ghosts came back to haunt Adani by the way of an OCCRP report, which is an NGO, which also alleged that some of these opaque structures, and identified the people who are behind these opaque structures, which were directly or indirectly linked to Gautam Adani. That was number one. Number two was the Financial Times report, which opened, another can of worms by the virtue of coal price manipulation. Those were two serious reports, two allegations to top the Hindenburg allegations. It's been a tough year for Gautam Adani.
Right. All I can think of is that after all of that talk about from OCCRP to the Financial Times and so many of these publications, and the moment the word came in that Hindenburg's report cannot be taken as gospel of truth. Yeah. That's all that the Supreme Court said. You know what happened to the Adani stocks the day after? It made all those Financial Times reports look like absolute child's play. To me, the momentum behind the Adani stocks and the momentum behind people wanting the Adani stocks to not fail was too bigger than anything else that Adani. I mean, the word that I can think of when it comes to Adani is when the going gets tough, the tough gets going. That's what it looks like at the end of it, because let's face it, it's Indians and Indian consumers who are invested in stocks and mutual funds, where mutual funds are invested in Adani stocks, and you wonder about whether your mutual funds are giving you the kind of returns or not. So from a consumer perspective, whatever they thought they lost at the beginning of the year, they've got that back and more by the time the year 2023 rounded out.
At least in some of the stocks.
And that is the Supreme Court saying, right? And then there was another case, which was Adani Group wanting to develop a port in Sri Lanka, looking at a US-based lender, and when it goes to the US-based lender, the FDC says that the Hindenburg research is inconsequential.
Yes.
So, and that gave the second, to them for the loan they were giving out.
But it was very consequential. Dalal Street
the
and
word
the stocks.
Inconsequential became completely consequential for the stocks of Adani Group. So I think Adani Group has pretty much from the month of Jan 24th, when it was, till 23rd Jan, it was obviously, riding on its 10-year-old wave of stock market highs. And then 24th, when the stocks came crashing down, thereafter, it has more than pared most of its losses, whether it is Adani Enterprises, whether it is Adani Ports and SEZ, whether it is Adani Total, whether it is any of the businesses that Adani Energy, Green Energy, and now look at the fillip that Adani Enterprises is actually going to get by way of green energy. Less than a few weeks ago, the COP28 summit actually ended, and energy transition green energy transition really became the buzzword, and something that the entire group which was participating in COP28 came to agree on, that the energy transition has to happen. And guess who's going to be one of the biggest beneficiaries, or two of the biggest beneficiaries of India's energy transition from fossil to green? It is going to be Adani and it is going to be Reliance. And these two companies, obviously the green verticals of these two large behemoths of corporate India, are absolutely well poised right now to ride on this energy transition wave. So overall, I think it has been a year of ups and downs, but by the time we come to 24th Jan 2024, we might see actually all the losses pared and the Adani Group, sort of stabilized on all fronts. So,
all right.
I think the Hindenburg research report is done and dusted. We haven't yet seen SEBI's report final.
Should we write it off just as yet, because the Supreme Court order is still awaited, and we don't know whether it's going to be a clean chit or not. I know the commentary looks like they're not taking the Hindenburg allegations very seriously.
In my understanding, Supreme Court is not going to hear the matter of Hindenburg Research versus Adani Enterprises. The matter limited to the Supreme Court, and it has kept its judgment pending in that matter, is only to find out did SEBI do its due diligence.
Or
Has
not.
SEBI
Yes.
done its job correctly or not? And the Supreme Court has reserved its judgment in that matter up until now. But one way or the other, whenever the Supreme Court judgment comes out, that judgment is actually a judgment on SEBI, on the market regulator, and not specifically on any misgovernance or misdoing on the part of Adani Enterprises or Gautam Adani. And that is completely SEBI's own investigation, SEBI's own remit. So even if, and a big if here, even if there is some sort of a direct or indirect correlation derived between the top of the food chain of those opaque structures and some historic linkage to the Adani family, one way or another, is perhaps going to move the markets or move the stock a little bit for a day or two. Beyond that, is there going to be a long-lasting repercussion on Adani Group? Sitting in the end of December, awaiting the SEBI report, I doubt there is going to be anything
Unlikely.
negative happening on Adani.
Unlikely.
Right, and that is the story of Adani Group that started on a not so very positive news when it came to the Hindenburg Research report in January of this year. Come the end of 2023, it appears Adani seems to have reversed most of its fortune. Now, the Gautam Adani is back again as one of the richest man, top 30 richest man in the world. And with that, it's time for a short break. We'll be back in just a bit.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए, और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है मनी 9। आजादी पैसे की। अभी डाउनलोड करें।